Hello, everybody. First of all, I really have to say I'm very happy and I'm very honored to be able to speak here. I remember exactly the times around 4 years ago where, this was just in the beginning stage, and really it was maybe 10 people sitting together in the backyards, and it was really the start. And now to be able to sponsor and be at a conference in a venue like this is just amazing, and it's really incredible. And I want to thank you all for coming, and I'm very excited for the conference. We're talking about the #1 disruptive technology at the moment in the financial sector and on many other sectors as well. We're talking about the blockchain, and in particular, I'm going to speak about blockchain technology, and also at the end, in particular, a very interesting opportunity to join and to also invest in particular in mining, which is the basis of all public blockchains. So let's get started. So first of all, what is a blockchain? Simply put, it's a data storage in chronologically ordered blocks, and the blocks, which is important, cannot be altered or manipulated. This is a very important feature of a blockchain, and the changes of the state by a cryptographic is done by cryptographic authentication. We have a small comic down there. That's what you see quite often at the moment. I remember, also on conferences, on big conferences where people are sent to a blockchain conference, they get the idea a bit, but don't really understand it, so they all want to jump in, and you get a scenario like this. So I first want to make clear the difference between a private and the public blockchain. I think this is a very critical difference, and really needs to be understood well. So a private blockchain, for example, when you look at who is maintaining it, for a private blockchain you have the pre-selected groups, and for the public blockchain it's really everyone that wants to participate. You can also see, for example, who is producing the data. It's permission people on the private blockchain, and it's the users on the public blockchain. Also, a very critical point is also the need to trust authority when it comes to trust issues on the private side, and on the public side there is no need to trust anyone, which is a real big innovation behind. So I don't want to speak bad about private blockchains, but the real big innovation and the real key technology is all sitting in the public blockchain, where you have a network where no one needs to trust anyone, but still there is consensus and trust in the whole network. This is the big thing. Now, you all heard about it probably, especially now. There are cryptocurrencies, and cryptocurrencies, it all started in a way with Bitcoin, and blockchain technology was fundamental, and it's the basis of Bitcoin. But Bitcoin was there first, and then of course the people discovered, there is blockchain technology behind, and now you have it more generic, and you have this field of blockchain technology that is decoupled of Bitcoin in a way. But a critical point really, and a very big innovation, are the digital currencies that are sitting on public blockchains. So they're all using all the innovation that you can get on the public blockchain technology. And you can see it in a way as a kind of self-serving network. So you have the exchanges that bind the network together. You have the users that, of course, vitalize the network and spend the currencies. There are more and more opportunities, and as the adoption grows, you are able to spend at more and more places on the world cryptocurrencies. And of course, there are the miners, which I will explain later in more details, that are securing the network. So just a couple of very big and really driving features for cryptocurrencies. I think the most important, simply put, is really with cryptocurrencies, you can imagine a scenario where you're sending money from anywhere on the planet to anywhere else within light speed, without any boundary, and without fees. Fees is a topic we can talk about later. There are, in some cases, there are optional fees, but in general, it's not to compare. For example, if you want to send a wire from Europe to a farmer in Africa, I think it's just a complete different dimension in terms of time and in terms of barriers and in terms of costs. It's really unimaginable. Another big point is that cryptocurrencies are decentral and are not threatened to be are not vulnerable. For example, we saw in the financial crisis, we saw this financial network is highly vulnerable upon certain entities, single entities in the world, in the ecosystem. In cryptocurrencies, it's fully decentral. So even if you would take out a large amount of nodes, the network would still continue to thrive and would still work. Also, another point is that it's open source, so everyone knows what they are getting. Everyone can validate, everyone can read what is really the source code, what is the baseline. There is nothing hidden. It's all transparent. So I don't probably need to talk much about those, but those are the top two candidates and the giants at the moment for an example of a public blockchain, cryptocurrencies on public blockchains. Whether you want to see Ethereum as a cryptocurrency, it's also a bit broader. It's because it serves actually a whole framework, and there are more than just the Ether, the currency. But I just want to list it here. I think it fits very well. And I really have to say, I mean, maybe you have followed the price. Bitcoin it's since 2009 now in existence, and by now it really has gone through a lot of ups and downs, and there were a lot of crises also, and there also were a lot of uptrends. And recently there was this issue of how to scale the network. Everybody, or the Bitcoin network needs to grow, the adoption needs to grow, and there were this block size debate, which you probably heard. It was a big internal debate. And that's why I said I'm really happy that really now you're seeing a large movement going in the upward direction right now. You have probably seen the price within the last 3 days. It went up, coming from actually $440 to now, I think $540. Within 3 days, it's just completely incredible. And that is because there is more and more people realizing the potentials, and specifically that there are now concrete solutions to scale Bitcoin, and the innovation is driving on that field. I'm talking about innovation like on-chain scaling, second layer scaling, which is the Lightning Network, makes it, for example, which makes it much more easy to transact on the blockchain without having to use the blockchain too much, and also talking about sidechains, rootstock, and also smart contracts on the Bitcoin blockchain. I don't want to go into too much details here, but just that you have a kind of imagination what's going on there and what kind of solutions are out there now for scaling and just generally expanding the functionality of Bitcoin. For Ethereum, this is an incredible story anyhow. I mean, it started around a year ago with around $18 million funding, and we are around $1 billion market cap already. So the price in the last 4 or 5 months multiplied by 13. And it's just, it's really, I mean, it's really a pleasure to be in that and see how people are realizing the technology, and now more and more use cases are emerging. For Ethereum in particular, the top use cases and really great functionalities that it offers is that compared to Bitcoin, it can transact a bit faster on the chain, so the block time is lower, and you can have arbitrary assets on the chain, which is great also for the financial world a lot. I remember I spoke to people from Barclays Bank, people from JP Morgan, and they really are looking into that very deeply in blockchain technology and also in Ethereum, because offers a lot of opportunities in that world. And also smart contracts, which offers Ethereum. So now the essence of that, what I really want to say is that both of these chains, both of these cryptocurrencies are based on public blockchains. And on public blockchains, you need a security and a trustful consensus systems, a trustful consensus system. And we know a couple of consensus systems that theoretically have high potential, but the only one we know that works so far, and really Bitcoin has proven that, being now in existence since 6 years, and really a lot of people are trying to crack the system, to hack it, and were unsuccessful. It's really based on the top cryptographic technology that we can imagine right now. So both need a high, secure, and trustful system. And the consensus system, number one, we know so far, is the proof of work system. And proof of work is nothing else than mining. You may also have heard about proof of stake and others that still need to prove that whether they're really working. So far, proof of work, the number one and the highest candidate and the best solution for generating trust on a blockchain. So to give you, so that you also understand, you might now question, I mean, there are miners that are securing the blockchains, but why are they doing that? I mean, is there any incentive? And of course, yes, there is incentive. So miners secure the blockchain and get a reward from that, from the system. They get two sources of incentive, two sources of reward. They get a reward from the blockchain. It's the block reward, which is programmed in the system. And then they also get the transaction fees from the users. That's important to understand. The transaction fees from the users are growing, of course, with the adoption and the growth of the network. And the block reward is actually declining over time because it's a converging series. For example, in the case of Bitcoin, there are 21 million Bitcoins that are ever be mined until probably around 2140, the year 2140. And right now there is around 3,600 Bitcoins that are generated per day, but it's getting less and less by processes called halving. So that means also that it's getting more and more scarce. So that at one point, every 21 million Bitcoins are mined by the year of around 2140. So that's what I wanted to tell you, that this side of the reward is declining. And the transactions are growing, of course. Transaction fees are growing by the growth of the network. So now I said I don't want to go too much into the details of mining. It's a very technical topic, but just to understand the progress that is made on that field, it's remarkable. We started first with the CPU. So Satoshi Nakamoto, the founder of Bitcoin, who is still anonymous, were the only miner when Bitcoin started, and he mined with his computer. It's incredible. He mined so much Bitcoins, around 1 million Bitcoins he mined just with his laptop. And of course, then more people got in and wanted to have a piece of the pie. And we jumped from CPU to GPU mining. GPUs is also something that you know is the graphic card units that you have in your computers. And then we get more advanced in the FPGA technology, which improved the speed by around 2. And then the big jump was to the ASIC machines. It's really specific chips that were made and very small in nanometer sizes. And that increased the computation power by a factor of 100 coming from FPGA, which is incredible. So that really shows that this industry has emerged and really got from a small industry to a very large, maybe even heavy industry. It's really comparable. Right now in the mining market, I think you can differentiate between two groups. It's the home miners and it's the large-scale industrial miners. The home miners are buying the machines from the manufacturers and retailers, and they install the software using mostly standard computer accessories. So they go in a computer shop, buy PSUs, and buy motherboards and all the accessories you need for it. And they use the software that is community driven and mostly open source programs. So now we come to the really interesting part, which is the large scale mining. And this is really an industry that has emerged and grown out of, with the growth of Bitcoin. The large scale miners, there's only a couple of large scale miners on the world. And of course, those miners who are in that space are gaining more and more traction and are getting bigger and bigger because of their advantages they have. And with the difference to the home miners, miners are buying them, the machines mostly in bulk, directly from the chip manufacturers. They have their own infrastructure, optimized data centers for it, and really have the best infrastructure that you can imagine for mining. The installation of the hardware is in large-scale facilities, and they're using customized software. For example, we are using our own Genesis Hive, which is a very advanced monitoring tool for really the big, large-scale operations. It's just to give you a small picture of this program can really monitor thousands of machines and can immediately say, okay, there's a heat, the gradient of heat, and that one corner is too high, so maintenance people should go there and check it. And for example, for us, this is a big innovation and a big key feature compared to other miners who have, for example, 20 maintenance guys at a facility where we just have 2 to 3 German engineers and use the software. So having explained about this situation, I think really the mining is at the moment a sector, and it's the #1 sector with really where there's the biggest opportunity for an investment in blockchain technology. Specifically in public blockchain technology, because the private blockchain technology that is not necessarily needs proof of work and miners, there can be other options. But private blockchains are the minor part. The big innovation is on the public blockchain side. I get that question a lot. So people are asking, how can you benefit from mining? It's a very tough and very highly competitive field, and that's completely right. And if you're not doing it wrong, you are also have a high tendency to lose money. So what are the key aspects of mining? How can you profit from it? And it's actually quite simple. There are 3 main points. It's the infrastructure, it's the electricity costs, and it's the hardware efficiency. So in order to benefit from mining, you really need the highest, the best hardware, the best chips. You need the lowest electricity cost that you can imagine, and you really need the best infrastructure you have. And I mean, for example, the lowest electricity is a big task. I mean, you have the whole world as an opportunity. The whole world is there you could use, basically. So you can go around and search now for a territory that is very attractive. And there's literally a war going on the big miners to find these electricity sweet spots on the planet. Where is the lowest electricity? And it's very interesting which kind of areas you're discovering there. We, for example, are in Iceland. Our main base is in Iceland, but we also have other facilities on other planets in the world. Iceland is in particular interesting for us because it has 100% green energy, it's very cheap, and it also has the cooling side. But I know also, for example, here in this territory, there are big opportunities for miners. I just want to go briefly into this here. You see a model, a very simplified model that shows what I actually just said in a concrete case. So we have 3 types of efficiency classes, 3 types of miners. We have a low efficient miner. That means he's paying a lot for maintaining the farm. We have a middle class, and we have a high efficient miner. And now we just go look at the time, and we decrease the mining profitability over the time. And you see here the rewards, the returns of each mining operation. And as time passes, you see that at first, the green line flattens out. That means that the green one is in the reds. So that means he's not able to cover his high costs. He is the lowest efficient miner, and that means he has to step out of the game, because he would run into a loss if he continues. So he steps out, but because mining means that in Bitcoin and in Ethereum means that at a given date there is a certain amount of Bitcoins mined, no matter how much miners there are. That means that if this one is dropping out, the other two have more of the pie now. So that means their rewards are getting boosted, and you see it. I mean, it's clearly going upwards when the green miner is flattening out. So both of the two that are remaining are earning more. So now time passes, and you see then when the profitability is reducing, at one point the medium one has to stop, has to get out, and that means the one that is surviving and the highest efficient miner will get an additional boost and has even more profits. This is really the key of mining. Additional, this is what you can also do is, I mean, you know, the cryptocurrency space is big. There is more than 300 cryptocurrencies. Bitcoin and Ethereum are by far the largest ones. But you can now, and this is actually what we also did right at the beginning when we started years ago, we had the machines, and we thought, well, I mean, Bitcoin and Ethereum is great. This is, of course, our main target to mine, but we could also use the other cryptocurrencies. They are also mineable. So what we did is we really looked what kind of cryptocurrencies are also profitable to mine, and made a clever portfolio optimization of cryptocurrencies that are profitable, are the most profitable ones to mine, and then we can all convert them on the market to a certain goal currency. For example, Bitcoin or Ethereum or anything else. So we can use the whole cryptocurrency market, mine different alternative currencies, and exchange them all to Bitcoin later and receive Bitcoin. And more profits because of that compared to just mining Bitcoin alone. And then, besides this trading that you could use for getting more profit from mining, and besides of course, the three key points I mentioned, there's also now an interesting opportunity for industrialized and for high net worth individual investors to be able to invest in mining as a security, and that can be done in investing in Bitcoin mining funds. And the first one that has now just been founded is the Logos Fund, to just name one. I'm sure there will also arise more because there is just opportunity to make a profit. I want to name this option, that if someone is interested in just investing as a security, this is the way to go. It has just been launched. And it's SEC approved, and also BaFin, which is the German regulator, it's BaFin approved. So coming to the end, I really just want to highlight that. I mean, you have to see, there's only 25 Bitcoin that are still mineable right now. So 75% of all the Bitcoin have already been mined. And of course, the big players are now looking how to get the rest of the coins the best way and the cheapest way. And with mining, if you do it right in the right size and scale, this is a big opportunity. And also in Ethereum, there's 15% that are only left to be mined. And I don't need to tell you, I guess, if you have, I mean, the networks are growing, the adoption is growing in both fields. But on the other hand, the rewards and the mining supply is decreased because of the halving events. You have a decreased supply and you have an increased demand that certainly also leads to a higher increase of the underlying asset, Bitcoin or Ethereum. So that really means, I cannot highlight that enough, if you want to go into mining, or also in general in Bitcoin, but in particular of mining, the time is now. You shouldn't hesitate. and really use the opportunity to get them as soon as possible. There are big players behind that, and they're all thinking about what is the best way to go into this space now. So I hope I could help you a bit and explain you a bit about blockchain and the mining opportunity. Thank you all for being here, and have a great conference. I will be here today, and also check out the lounges and also the booths and the areas that we're built up here. Thanks a lot.